Nationwide inventory is up, but there are certain parts of the country where inventory is low.
Really low.
Stay tuned, we're going to talk about that. We're also going to talk about interest rates and where they're going. Let's get started with the housing market update. All right, so big three, the prices are down. I haven't had a down arrow, a red arrow on prices in really a long time. Inventory sideways, and that's to be expected at this time of the year. And then rates are down. I love a green arrow facing down under them rates. And what is the headline news this week? This week we got the Honolulu Board of Realtors housing market update. It showed some pretty good numbers, really across the board, if you're a buyer and you're a seller, and we'll kind of get into that. Nationwide, inventory is up, but like I said, there are some areas that are struggling with inventory. Fed Chair Powell, this is another big one and news to watch, especially as we go forward. The Fed is meeting in August, but they're not making a decision, but they'll be talking a lot. And then there's so much going on there. We'll talk about that. And then VA rates. VA rates are heading in the right direction. Interest rates, as in general, are heading in the right direction. So let's get down into this right now. All right, we'll start off with the Honolulu Board of Realtors July housing market stats. You can see median sales price single-family homes down to 1.075 million. Oh, really? Kind of a big drop. We'll get into the why there. And then median sales for condos actually dropped below 500,000, first time in a while. And there's a reason for that as well, too. So let's break down some of the monthly indicators. All right, closed sales were actually down a lot for single family homes, 249 versus what we had last month, 289. But condos, surprisingly, were up from 358 to 389. And you want to know why? Well, because the condos are more reasonably priced, and there is so much inventory, so I think you're starting to see some better deals. Median home sales prices are down across the board, but that's also a large part because we have more lower priced homes and condos being sold than we have higher priced homes and condos being sold. So that brings that median, which is the number right in the middle of them all, down, but still very high, very consistent overall. We look at median days on market, it's down a lot for single family homes from 24 to 20. That's pretty big. And then you had a 25% increase though for condos from 40 to 50 days on market. That is very, very high, folks. All right, let's break this down a little more. You had pending home sales showed a slight uptick for condos from 381 to 430, a 12.9% uptick, and just a slight little bit uptick up to 280 from 278. That shows us what we're going to see next month numbers wise. You look at monthly supply of active inventory, pretty steady as well. 3.7 months of inventory for single family homes, the same as last month. Down a little bit though, from 7 to 6.8 months for condos, but still 6.8 is a very elevated supply. Just basically what that says is there's a ton of condos on the market. And really, what this whole thing says is we have a pretty good amount of sales, but a lot of them are in that lower price range. Single family homes, you're looking under 1.5 million. Condos a lot under 400,000, so that's driving that number lower. All right, let's look at new listings. We'll kind of break it down. We still had an elevated number of new listings last month, again above 1,000 for the 5th month in a row, and 6 out of the last 7 months we have had over 1,000 new listings. What are you seeing there? This is probably much that time you expect to see number of new listings come down because school's starting, all right? Everybody's already moving, so I would say expect listings to stay in this ballpark, maybe a little below 1,000 moving forward, maybe dropping 800, but inventory is already there. We have a lot of inventory. And speaking of active inventory, we have more inventory now than we did before COVID. This actually in July was the first decline in total number of listings since December of 2024. It's a slight drop though. And again, the number of active homes on the market, that level is elevated. Individually, both single family homes and condos are near 10-year highs. And again, this bodes very well for buyers. On my street, I never have more than one home on the market in my street, in my community. There's like 4 of them now. And we'll see what happens. But and they're in that 1.5 price range. But people are moving. They're moving for different reasons. Some are moving because they're getting a divorce. Some are moving because they're downsizing. Some are moving because they're deploying. So everyone's got a different reason. Right now, we got 4 on the market in my neighborhood, and it's like that in many other neighborhoods on the west side. All right, looking at closed sales, we see some resiliency on the condo market. We saw an increase from 609 to 647, a slight decrease in overall sales, but still not bad considering the rate environment that we were in July. Rates really didn't start going down until that last couple days of July. And if rates continue to go down, expect the number of closed sales to go up. And I know every realtor, and I talk to realtors every single day, and they have listings. They have a lot of listings right now, and they are ready to make a deal. The sellers are ready to make a deal. And if rates come down, the deals are definitely going to be there for buyers. A quick breakdown on the single family home front. I don't really talk about this too much, but you can see where the large number of closed sales are. Really, that $800,000 to $900,000 range is where you're seeing the most sales. $1 million to $1.5 million. That's a drop year over year, but still, that's a lot. You look at days on market. Single family homes, $700,000 or below, sitting on the market a long time. Typically, a house that's priced that low, it's got issues. So that's kind of what you're seeing. But days on market, $800,000 to $1.5 million, pretty low. Actually, up to $2 million is pretty low. 11 days on market is a median days on market for 1.5 to 1.99. I would imagine many of those homes are in the Kailua, Kaneohe area where there isn't a lot of inventory, so those homes go a lot quicker. You can see we're pretty close to getting the original list price received. Everyone's above 95, 96%. With the exception of the lower price single family homes in the $3 million or more, which none of us are really in the market for. The number of new listings, again, a 1 to 1.5, that is Ewa Beach, that is Kapolei. Just interesting to kind of see the difference in the price ranges, what that does to the various metrics that we're measuring. And then you look at month supply, we'll kind of break this down. Active inventory, you see 230 homes, active inventory, 1 to 1.5 million. Again, a lot of those, heck, we got 3 on my street. A lot of those are in Ewa Beach and Kapolei. The rest are in 68, 52, 57. As you go down in price range, there's still a lot of inventory. That is very good for buyers. And that huge inventory for that 1 to 1.5, that's why you're seeing a lot of credits. How are you going to incentivize somebody to buy your $1.5 million home over somebody else's? You're going to have to give some seller credits probably. The total inventory in escrow, you know what? The most inventory in escrow as well is the 1 to 1.5. And then you look at month supply, not a lot. 800 to 899 is what most people want on a single family home, but you don't have a lot of inventory. 1.9 months of inventory, that's the lowest amount really of any price group on island. So it really I don't break this down that often, but I think it's pretty good to kind of see where everyone is buying, where the inventory is by price range. So I think that's a good slide. Let's look at median sales price. It's kind of where the rubber meets the road, and no, not really. It's kind of flatlining, folks. Kind of flatlining again, down a little bit, to start August. But if these rates come down, I expect to see those prices go back up. All right, so where is inventory up? Inventory is up 25% year over year, but compared to pre-pandemic in 2019, July of 2019. There are certain parts of the area where you have a shortage of inventory. You look at the Northeast and the Great Lakes states, over a 40% negative number today compared to what we had back in 2019, minus 40% inventory. I know in Virginia is minus between 20 and 40% decrease in inventory. I know that those areas, where Hampton Roads, Fairfax, that Virginia, DC corridor, because you look at Maryland, still not a lot of inventory there, despite what you're reading in the mainstream media. But look at the Northeast, man, no inventory up there. Who wants to live there? I'm kidding. But no, I don't want to live there. And you look at the states that we saw a lot of growth on during COVID. The South, Florida in particular, Texas. Where did everybody move to? Florida and Texas. What went up? The prices. What went up? Building in those states. what has now happened? You have a lot of inventory. You have a lot more inventory. That wave of people going in has receded. That tide of people coming in has receded as some people move back to where they came from because maybe they lost their job or they couldn't find a job or they just didn't like the state they moved to. You also have, natural disasters causing insurance to go up. So I think Florida, Texas, you see a lot more inventory there. And then you kind of look at the mountain states as well. Arizona up to Washington, you're seeing a huge increase in inventory in those states. And, California and Nevada not too far behind. So just a really good graphic to see what's going on in our country. I'm sure there's a lot of different reasons, but I just wanted to show you that. Hawaii, we are in that 0% to 10% range, and that's exactly what we're seeing. We have more inventory now than we did before COVID. Not as much as, some of these other states, Florida, Texas, but we still have more inventory now. Let's get into Powell's pirate ship mutiny. Army matey. All right, there's Fed Chair Powell is under a lot of pressure right now. He's getting it from everywhere, from even within his ranks. All right, first it started off with the Fed not lowering the Fed funds rate last week. And then we got a weak jobs report, which really sparked rate cut expectations. There's fully a 94% chance, what the experts are saying, that we'll have a rate cut in September. And, what was the job numbers? Hey, only 73,000 jobs created versus 115,000 that were expected. And even bigger, the minus 258,000 job revision to the previous 2 months, which has led to us wondering, and we've known this for a while, anybody who looks at this, they do these negative revisions every month. And that's one of the reasons why Trump fired the head of the BLS. It's not because the numbers were bad, it's because they're consistently bad and inaccurate. They got to fix the system because it ain't working. But so you got this weak jobs report. Then you got political pressure mounting from President Trump. President Trump ain't going to fire Chairman Powell, but he's going to choose his successor. He's going to choose him pretty soon. Fed Chair Powell is also getting pressure from within. Fed governors are publicly expressing their divergent views. You got Fed President Moore, Waller, Kashkari, Daley, and Bowman all publicly saying that we should cut rates. And we should cut rates 2, maybe 3 times this year. And actually, you have Bowman and Waller. Actually, we're active dissenters on the last vote to lower the Fed funds rate. So he's facing pressure from within. And then one of the Fed governors, Fed Governor Kugler, also resigned. And guess what? President Trump's going to choose a successor. What kind of successor do you think he's going to choose? Somebody who doesn't want to lower the Fed funds rate? I don't think so. All right, and then top that off, today we got continuing claims, which continues to rise closer to 2 million. And we've been at 1.9 million plus continuing claims now for 11 straight reports. And this is a report that comes out weekly. And then, you know what? The UK didn't help anything. They just kind of stoked the fire a little bit because guess what the UK did? The UK lowered their Fed funds rate equivalent. Why are we the only one not lowering the Fed funds equivalent? All right, it just doesn't make sense. So really, when you look at this, man, Fed Chair Powell, the Fed is under pressure. They're meeting this month, 21st through the 24th, up in Jackson Hole to do their annual meeting up there. But I tell you what, I'd like to be a fly on the wall on that because I'm sure there's going to be a lot of discussion moving forward. But you know what? We'll get into what the impact is going to be for interest rates here on the next slide. All right, let's look at VA rates. You can see this nice little waterfall down from 6.3 last week down to 6.15 this week. That is very good. Now let's compare to last year, because remember last year the same exact thing happened. That didn't cut the Fed funds rate. And then boom, we got a jobs report that sucked. And you can see last year, VA rates were like around 6.2. Well, guess what? They are falling quicker now than they did last year. And last year, they dropped all the way down to the 5.6 range for VA. Before they started going back up, and they started going back up because the jobs report started showing a heat economy that was starting to heat up. You saw inflation starting to go up. So really, there is a good opportunity for interest rates to come down. And that is something that the Fed will be watching for the Fed funds rate. But interest rates, and this happened last year, interest rates, they saw the writing on the wall. All right, mortgage-backed securities, the 10-year treasury, investors really saw the writing on the wall. So they started bringing those yields down, or bringing the prices, the rates down. And that's what you saw last year. All right, they didn't go up until after the September Fed meeting. So we'll see if history repeats. All right, so what does this mean? Hey, mortgage apps were up 2% last week. They're about 18% year over year. Refis are up 5%. Refi applications, I should say, were up 5% last week, which is about 30% increase year over year. Really, just a lot of potential out there. Inventory still the highest one we've had in 10 years. And rates are down. Rates are down, but guess what, buyers? Seller credits are still available because buyers aren't coming off the bench right now. This could be your opportunity. Again, you got to do your homework. Is a 2-1 buy down the best use of your credit? Maybe you do a 5-1 buy down coupled with a permanent buy down, because our ARM rates are right now better than they have been in the past. And this is not just me, this is really across the board. So, but buyers, you have an incredible opportunity right now. Sellers, hey, lower rates could get your home sold. There's a lot of inventory. We're not going to lose all this inventory overnight. It's going to take a year for us to see all that inventory go away. But you know what? This is going to help some of you. So make sure you got your pricing right. Get with your realtor to make sure that you are putting your best foot forward. And hey, if you are having a hard time selling and you have an interest rate in the 6s, you may want to talk to your lender. You may want to talk to this guy right here, because might be able to help you. If you have to rent, I'd much rather rent a home with a 5.25 rate than a 6.25 rate. And we may get there in the next couple weeks. So, the key, I think, is don't give up. Don't ever give up. You got to figure out a way to make things work without giving up your home. And remember this too, veterans, you do not, as a veteran, your home does not have to be your primary residence to do a VA, interest rate reduction refinance loan, or an IRRRL. So it can be your investment property that's in the 6s. You could do an IRRRL, boom, all right, and lower that rate, and you don't have to live in it. You can't take cash out, but you can lower your rate, which is really what's important right now. Hey, that's all I have for you guys this week. You have a great weekend. We'll talk to you later. Aloha.